Good day. Today with you Volfix Trader Company. Today we compare the program Volfix with popular platform MetaTrader 4. We look and compare the pros and cons of MetaTrader 4 and Volfix program. MetaTrader 4 is quite popular among many traders. It is the best program to work with charts of technical analysis. It has a wide range of possibilities as drawing lines, vertical and horizontal. You can also put many filters, like Fibonacci, linear regression, and so forth, different types of technical analysis. You can also put different types of chart indication. Thus, you can put bar chart, linear graph, as well as candlesticks. You can also block different time frames, put different types of technical analysis, like ADX. They show the price movement conditions for opening and closing positions. Unlike MetaTrader 4, Volfix is not simple program intuitively, which got different modules that represent something. That's why it's not right to just compare different modules of MetaTrader 4 and Volfix. Thus, it's easier for the beginner to understand MetaTrader 4, so we set plus to MetaTrader. This is a simple program. It's more intuitive. On the other hand, all the other modules of Volfix can be divided into two types. These are the counters and growth. Let's open the bar chart with today's data. Accordingly, we see a picture to which we are used to. Let's set the daily chart. Let's choose the period for viewing these graphs. Accordingly, we see the about data. When using this chart, Volfix loses. We cannot add any indicator here. We cannot build different levels here. You can install only horizontal levels, select them, as well as vertical levels. You can make some inscriptions. Drawing function is represent, but it is a not big advantage. Thus, MetaTrader yet wins in this case, since Volfix lacks functionality for such specifications. Let's look at the purchase and sale, opening and closing positions. In MetaTrader you can do it quite simply. You can open a new order, then you can set stop losses. For example, let's put a little more. Let's set the take profit bit more as well. For example, we can buy some contracts. We saw the line for which we bought the contract. Also, we could buy the other contracts in the same way. In addition to order window, we can right-click and see the order book, where we can also make a bid. Also, we can open one-click trading, where we can see buy and sell positions. Either to buy or sell using limit order. We can also put alerts. In Volfix you can open or close positions only in order window. On the right side you can see the buttons intuitively understandable to operate. Thus, you can automatically buy market. We buy and see the current result, the number of lots which are bought. Also, you can see trades what you have done today. Open positions we got and so on. You can also set the auto buy. Thus, it is the limit for ordering. You can also set various alerts. It is also intuitively simple, clear, and user-friendly. Every chart shown is digital. So we see every single trade. We also see the order book, where we see a number of alleged purchases and sales. We also can cancel it all or trade it out. For those who are familiar with another type of order book, you can set a bar chart type. It may be more convenient for you. You can also put different time frames, 1 minute, 5, 10, or 15, and so forth. Either you can set the tick type in order to see the chart with ticks directly, The advantage of the order book is not only that we see buying and selling, as we can set delta instead of volume type of display. That is, we see not only trades, but the direction of sales. This is a big plus. The disadvantage is that you can do trades only in order window. That is, we cannot buy or sell a few contracts directly on the desired graph. Let us look at the daily chart of British pound and dollar. To do this, you have a lot of opportunities in MetaTrader. For that, you can set various indicators: accelerator, oscillator, accumulation, distribution, trend indicators, and so forth. You can optimize a variety of data on indicators of the program depending on the convenience for you. Let's look at the example of volume analysis using such indicator as Bollinger Bands. Let's put the default settings. Let's use the daily chart as it's the most informative for use with a variety of indicators. We can identify presumed entry and exit points. Since we are seeing a downward trend, therefore we can take a short position here and here. Sales have been possible. Here we see a growing trend. Here the stop knock you out, or you will fix a small profit. Here we could fix the profit or loss. In fact, it turns out that trading with these indicators gives some advantages. Depending on the strategy of setting indicators, the probability of successful trading can be different. It is absolutely usual chart, the usual appearance of the graph for most traders. Thus, many traders use it for trade. In this example, we see the chart as a table with figures. There are no indicators, thus no one will prompt us. Yet there are many elements that can be useful for our work. For example, these are the horizontal volumes from which the price goes up or down. Thus, we see that at the time of purchase or selling, prices form some volumes and often the price goes to these volumes. Second that we can see here is the delta. There is, we see that in some cases there was aggressive buying and in some cases there were more aggressive sales. Here we can see a number of these aggressive purchases or sales. So we can track the location of a possible entry into the position. For example, if we analyze the position entry, then we can pay attention to the aggressive buying or selling, and then we can trace the possible continuation of this trend. Let's look at these aggressive sales. There is, if we have taken a short position here, we can have a continuation. Not big, but it is. Again, aggressive buying led to further growth. For us, it was dangerous to take a short position because the stop loss is triggered here. Then aggressive sales started again and the price has gone down gradually. Here we see that February 26 there was an aggressive sale which led to a halt of a trend, from which the price has gone down again. As here, we can observe small purchases. We cannot talk about a radical change of the trend. Here again we see a sale, there is, we could take a stand. So this information tells us where better to take a position. Let's look at the last major movement. December 3rd, we can observe a major purchase. Subsequent sales were much smaller than this purchase, thus it can tell us about following price movement. For intraday trading, Volfix has another module called box chart, the use of which helps us to make a short-term speculation on the basis of huge volumes. For example, in the growth of 15 December, we can see a possible entry points. Here we see such a large purchase, here we see a large volume, but gradually this volume is reduced. If globally we plan to open a short position, then while reducing the volume of purchases, we see that here all buying is finished and sales began. In principle, using these volumes we could enter in position. To open short positions we use these tips as a delta. Where we need to go? When we see that purchases or sales are growing, then we need to see large bursts of volumes. Here we see the first burst of volume. After that the price has gone down. Here we see the second volume surges. Next we see large spikes of purchases. Thus, we could fix a part of positions or completely withdraw from position. Let's go further. After the fall of prices, aggressive buyers are starting to attack the market. Despite the fall in prices, price bounced and went upstairs. Later we see that despite the fact that the price has fallen slightly, ultimately it rose. Again, we see it, based on the two indicators. The first indicator is a measure of volume, like these huge volumes. The second indicator is a measure of buying, yet there are no major purchases. It makes no sense to leave the position. As soon as the big purchases appeared, the price began to rise. There were major buyers who began to drive the price upwards. One of the Volfix modules is the reverse chart. Reverse chart is a chart which is built up on the basis of reverse. This means non-linear growing, so we can set any volatility and enter provided purchases or sales. We can compare it to the delta. Here we see high volatility of purchase, yet we see little delta, so there is no point to go to the position. Just as we see here a small delta, though there is no point in selling the position. However, after we see strong volatility surge, at the same time we are seeing surge of purchases, then we can buy from this level and hold the position until this point when we see a major volatile sales. Again, at this level we could take a short position, since a large spike in sales until a large surge of purchases. We can adjust the volatility in different ways. In order to improve performance of profit stop loss, we can adjust the model of grow. We can also customize a line grow. We can also take into account the hidden ticks. It's one of the parameters of Volfix which can greatly facilitate your work. If we look at the data of December 14, we can see how in short term, using the reverse chart module, we could speculate the euro-dollar index. Let's turn our attention to the lower histogram. Aggressive buying and selling as well as the length of volatility. Once we see fairly large volumes here in volatile price behavior, we should take a position. For example, at the moment we see really the same volumes. Right here we see a fairly aggressive buying. Nevertheless, we see small aggressive buyers' interest. On the other hand, we also see an aggressive sale but little interest. So it's quite dangerous to open any positions here. See, here we got several bars at the same place with aggressive purchases. One and another. Here you could take a long position until aggressive sales. First variant, we can fix position in here, since a large bar of sales came there. If we have held the positions here, we could fix there either. Here we see a big sale. If we are determined to sell, then we can open the part of the position here. The given bar proves to us strong sales. Thus, we are looking until the aggressive moment. We could fix part of the position here while buyers were there. Partly we could fix them here, since also we can see buyers in here. Nevertheless, during strong sales we see no salespeople, so it would be dangerous to sell here. So we could make a small portion of the profits using the modular reverse chart. Let's summarize the results of our review. If you are a novice trader, then you will intuitively understand MetaTrader better. It gives a lot of different tips. It's quite easy to open and close the position, follow the market. Nevertheless, most traders use the same MetaTrader indicators, as well as using the same conditions for entry and exit from the position. Thereby, if you want to explore the market better and understand complex trading techniques, then Volfix platform will be more suitable for such purposes. Volfix is not giving a clear and early response on the basis of just indicators. You will need to decide by yourself. Despite the fact that its modules are rather complicated, you can more deeply understand the market movement and price trend. This will allow you to navigate in entering and leaving positions more accurately. Volfix platform is a program for the advanced traders, for those who are interested to understand the market basically. So, you have to decide for yourself what to be. For an inexperienced trader or a novice in this area, MetaTrader is more appropriate to start trading. For the professional who's looking for a deeper knowledge of the market, Volfix will be more suitable for trading. Thanks for watching. Cheers!